Charlie! I always find content really nerve-wracking. Do a bit of waffling talking about the market. You obsess about the video trying to be perfect, but these are really good, by the way.
What are they?
They're like electrolyte drinks. I don't drink alcohol, but if you did, I think they're good for hangovers basically. But if you're dehydrated all the time, they can be brilliant. Anyway, yeah, so we've got our vlog. This has actually been really difficult to plan. We've got 10 different coins in 10 different locations around London. And we wanted to do it because like people just buy gold, and they obviously buy gold for collecting, they buy gold for investing for lots of different reasons. But you know, a lot of people don't realize you can actually buy coins about things you're interested in, and actually that like makes a very different dynamic to it. Like we've got some cool things around London today, and then we've got some cool things tomorrow as well, more locally. So I'm looking forward to doing that. Obviously we buy and sell, so we're constantly moving stock on, and to have the 10 coins together that are all local to us, that are all things of history, is actually quite difficult. Because what we're going to do is we're going to do a video, for example, Tower of London, out the front of the Tower of London, and then we're going to do like Sherlock Holmes, for example. He's synonymous with Baker Street. We've got the 4-minute mile from Sir Roger Bannister, which we're going to do an athletics track. But yeah, loads of things like that. But yeah, it's been quite difficult to get the coins together because some coins were difficult to get, but it took us about 2 or 3 weeks to kind of accumulate them all. So whilst we're here then, let's talk a little bit about the market, my opinion of the state of the market and where we're at, and hopefully for some people it might be beneficial. But yeah, so we've seen a massive rally in gold, which by the time this video comes out, I think there's a small chance we might have had a pullback in the short term. I mean, at the moment it's at about $4,250 dollars, but I think that could easily pull back at this point. But then I've been thinking it's going to pull back for the last 6 weeks, and it just keeps rocketing on. But we've had a massive rally in gold, which has been fueled by, I mean, no one really knows why it's been fueled, but you know, they're saying banks have been buying, governments have been buying, retail speculation. I think a lot of it comes down to instability from Trump, in terms of people don't really know what Trump's going to say. So he's just like created the perfect environment for gold, basically, because obviously gold is looked upon as a safe haven. It's looked upon as a flight to safety. Every like other day Trump's messaging something crazy, which like obviously people have just had enough. But what I think is quite interesting is obviously our company BSC has we're a collectibles company, so we sell collectibles, but for the last 6-7 years we really have just been selling gold mainly. And the reason for that being is because a lot of the other assets just haven't performed very well. Obviously from a business perspective, although we're not an investment company, we sell products that can be deemed as an investment. Some people are buying them as a collectible, some people are buying them as an investment, but obviously we're not an investment company. But the products we sell are, you want twofold with it. You want to be able to make money, but also you want to be able to sell something that has a good future and something that can go up and obviously hopefully go up in value. So like a lot of the other things we've been dealing in, like our business is set up to deal in, like art, wine, watches, those markets have really struggled. But what I'm interested to see, like 2026, 2027, 2028, is now equity markets are back at all-time highs, gold markets at all-time highs, crypto markets at all-time highs. It'll be quite interesting to see if that money comes out of some of the mainstream markets and starts propping up the other types of assets as well, because like historically art's been a great asset to own. The last couple of years it's just been in the doldrums, I think you'd call it. And same with watches. Like I remember back in the pandemic, the watch market was boom. Do you like watches or?
Yeah, well, I don't have a nice one, but
that's all right. You'll get one. You're only young. I don't have flash watches anymore, but this is a vintage Omega. I mean, I say this isn't flash, but some people might think it is, but you can get these for a couple of £100 now. Yeah, the watch market has been like smashed to bits basically, and it'd be interesting to see when these crypto bros start taking profits and diversifying again, if there is a big bid up in the watch market again. But yeah, coins have just been absolutely flying. Like, and also as well, what's quite interesting is like our target audience has changed a lot. So because we first started in 2013, that was almost another. I mean, what were you doing in 2013?
I was at school.
Yeah, there you go. You know, and you're a man now. So in 2013, the world was like a really different place, and like the way you would market and the way you would acquire clients in your target audience was very, very small. And then like when we pivoted into gold coin, collectible gold coins, like it was so interesting because the demand for those products is so much larger than what you think in comparison to wine or even art, for example. I've seen it myself, like all of the inquiries we get, they've always been about gold coins. I think that will change in the coming years potentially as other markets sort themselves out. But it's been really interesting to see the target audience change. So like 15 years ago, it would be someone who was like 65 and it would just be like a certain demographic. Whereas now, we have customers that are 18, 20, 21, 22, and their plan is to buy one sovereign a month or every other month and build up a collection. It's really funny how everything's broadened out. And the other thing that's really interesting as well is like back in the day, you'd have GDPR compliant data and you would like mass contact people, and that would be the strategy to acquire clients. And you'd have to have like 20 people, three-quarters of them would just be marketing and then a few of them would be driving revenue. Whereas now with like technology, with all of the online ads, you can be like really specific about who you target and how you target them. So like that's really interesting as well, because we used to have, I think at one point we had like 10 employees, or even more, we had more. But now we've got 3. And it's like life, it's funny how technology has made life so different for acquiring customers. I always find that quite interesting how the industry has developed. But I think our goal with BSC, because obviously like when you have a company like ours, when you're buying and selling, you have to be really careful you don't get ahead of yourself. Like a lot of people that I know, they get ahead of themselves. They start thinking they're Rambo, they overexpand, and they mess their business up. But what we've always done at BSC is kind of kept really small. Even when we had 10, it was like some people would have had 50 at that point, in terms of the market share we had. Because I've always thought to myself, like, the bigger we build our foundations, when we do want to scale, the easier it will be to scale up. So I'm quite excited for that for 2026, where we can start scaling out our team, because we haven't done that in a long time. So that will be interesting. I'm looking forward to, I love gold coins and it is my favorite asset, but it would be nice to grow the other areas of the business, because wine is a huge market, art is a huge market, watches are a huge market, and it would be nice to gain some sort of market share on those particular assets rather than have a collectibles company that's set up to sell them assets but only sell gold, if that makes sense. Let's talk about why we're making content. Obviously some businesses, they need content to survive. That's not the case with us. We've got like a very diverse marketing streams of how we market and how we acquire customers. But the point is, for content basically, is like, the fact of the matter is, gold is a great asset and owning gold is a great thing in my opinion. But the biggest concern is that I think a lot of people worry about being scammed. And obviously the horrible scam word is like, it's a horrible word. And I know as an investor, because I'm an investor, the last thing anyone wants to feel is stupid. Like I've made loads of investment, so of course I've made some rubbish investments, and being stupid and feeling foolish is the most stressful, worst feelings. And I think like people literally will hear someone on the phone and they'll think that they're talking to someone from Bangladesh or something like that, and it's just like, hopefully the content at least makes people feel that they're gonna get the product in hope of customer acquisition. Like our goal, like at the moment, we generate probably 30 new business counts a month, which is like 30 new people every month for us to speak to, of which some go on and spend lots of money and some don't go on and spend lots of money, because a part of being able to generate clients is you don't want people moaning. So if someone doesn't want to be called, we just leave them. We don't keep calling them, because obviously you want it to be approachable. But like my goal with the content isn't necessarily to get people to spend more money in terms of the amount an individual spends. It's to try and get more people on board with the company so that our database grows. Because like a lot of these gold companies, like us as well, we're all actually very small. So there's this perception that they're like these massive behemoths and stuff, but it's just not the case. Like most companies have 1,000, 2,000 customers. And if we can get that to 10,000, it just means that we've got a much larger target audience to speak to. But I think that's the most important thing, is like when someone buys from us, they're going to be getting a fair price, do their research, they're going to be treated with respect. The goods will be delivered in 48 hours straight away. There's no long wait times of stuff. Everything we sell, we own. And I think that's like really important to me, that because most of doing this is just being able to get people comfortable to get over the line. And at the end of the day, if you have 100 new people, you can't expect all 100 of them to want to keep buying gold coins, because that's just not the way the world works. But if you keep them up to date, you are nice to people, you respect people, when people come into money, or they have a big event in their life or something like that, grandchildren, you know, they may decide to do business with you. So I think for me, the most important thing is to try and, I'm not focused on turnover, because, or making money, genuinely. You know, obviously there's a certain amount of money I have to make to pay my bills. You know, that I'm going to get that regardless whether we scale or whether we stay the same size. For me, my goal is just to have an abundance of customers. And I think we do that by people understanding that we are, obviously make your own judgment call, but I feel that we're good people. You know, I feel like our team are nice people, and you're going to get the product exactly as advertised, and it's going to be delivered to you. And I feel, you know, that's really important. And one thing about, like, I'm sure it's in every industry, but I've obviously only worked in my industry since I've been 17 for the last, if I'm 33 and I started at 17, how long does that mean I've been doing it? 16, 15.
Yeah.
So all I know is this, but like in our industry, very creative, and I'm sure every industry is, but it's like, oh, they're not good, oh, they're not good, oh, they're not good. You know, obviously people that are like experienced understand that if another company's saying that, it's generally because they're threatened, and it's the only way for them to try and gain the business. But I think the important thing is for people to understand that like a gold coin is a gold coin. Like, it doesn't matter who you buy it from. What matters is, did you enjoy the experience? Did you pay a fair price? Obviously the company has to make money. No one can do it for free. But did you enjoy the experience with the person that you dealt with? And that's really important to me. Like, I want them to speak to my boys or girls or team and be like, yeah, they're good people. Did it arrive promptly? Was it a fair price in research? I think that's really important. Like, a lot of people try and say, not about us, because I feel like we've kind of been like grandfathered in at this point. So I think the newer companies just know to kind of leave us alone. But some people are very hell-bent on like, they don't do it this way or they don't do it this way. Like, buying gold coins is buying gold coins. Like, they're the same coins, aren't they? They're graded, they're encapsulated, they're either graded by the PCGS or NGC. Like, the whole point is that they're all the same, right? So we just want to be approachable, and we want people to know that if they buy from us, they're not going to be hounded. That might sound like obvious, like, of course you shouldn't be hounded, but the truth is, in markets like this, you know, it does have like motivated young men that have watched too much Wolf of Wall Street, unfortunately. Have you watched Wolf of Wall Street? Yeah. And, you know, they're trying to sell. And what I'm really proud of at our company is it is like genuinely as consultative as it can be. You know, that's proven in our reputation, because the amount of deals we've done and the amount of people that we've spoke to, you see it with these new companies, their brands just bash to bits because they've got these greedy salespeople that just don't take no as an answer. And that just isn't the way the world works. Like, people will buy because they want to buy. Like, with gold coins and collectibles, it's not that world where it's like, I don't want to do this, I'm going to try and persuade you to do it. You're better off casting your net further and actually finding people that do want to own gold, because there is such a large amount of people that do want to own gold. There's no point focusing on people that don't want to own gold, if that makes sense. So I want to try and be as approachable as possible. And I'll tell you something else that's important. I don't know if I should say this really, but I'm gonna. When people buy a collectible, whether it's original art, a vintage watch, a graded gold coin, vintage white, you know, these types of tangible assets, you need to make sure that you have physical ownership of it, because these companies, including us, they're unregulated. And gold and alternative assets, tangible assets, it is an unregulated market. So every company is unregulated. You know, you buy the asset, that's brilliant, but you need to, one in the hand is worth more than two in the bush. And that's why, like, I love the fact that our company doesn't offer storage. So everything we do is from our vault delivered to the customer. And that might not mean much to people right now, But I've been around for so long, I've seen greed get the better of people in the papers and in the news. And, you know, all I would say is, like, genuinely, whether you buy through us or whether you buy through somebody else, make sure you get your gold delivered. There's loads of independent vaults around the country. You can just Google vaults in my area. There's metro storage boxes and all sorts of stuff. But there's loads of, like, independent vaults that you can use. But you need to make sure that you physically got your product, because you don't want to buy it, pay a markup, because that's the nature of the business. It works out, and then obviously you go to redeem it, and obviously you have issues with getting it posted to you. I'm not saying that's the case, and I'm not saying that will happen, and I'm not saying I know of any company that has an issue with it, to be fair with you, but I'm just saying, to me it's awfully odd when companies want to hold on to the product, because if you've bought the product, it's theirs, post it out to the client, get it delivered basically. Let's talk about margin. So everyone, hopefully people understand that when you buy and sell, it isn't done for free. But one of the biggest misunderstandings is that, let's say for example, first of all, collectibles should be bought to enjoy and as a passion investment, and if you make money, it's a bonus. But even the most hardcore collectors I know that collect 1937 sovereigns, they're still buying gold coins not to lose money. Or people that buy Petrus 1982 or Basquiat or whatever, they're not buying stuff because they just want to look at it. Of course, there's a financial element to it. But with margins, and this is important, let's say you're at a hedge fund or you're at some sort of regulated investment. Let's just stick with a hedge fund because I know how they work. So hedge funds run off 2 and 20. So they take 2% every year under management, and then they take 20% of profits. That's like a standard hedge fund fee structure, if that makes sense, right? But obviously, being unregulated, you're not managing people's money, you're selling a physical product. So there is no way of structuring it in a way of taking a management fee, nor should anyone do that either. But just to explain, forget about the performance basis. If you just take the assets under management, in 15 years, the fee is 2. Just say, for example, the fee works out 30%, right? 2 times 15 is 30, right? Hopefully. That's a 30% fee that's been taken. Now, obviously, businesses like ours, we're not funded. We don't have billions of pounds. We have to make our money up front because, one, we're legally not allowed to take a fee regularly because it's just a sale of a product. But 2, we couldn't afford to anyway. That's the truth of it. The problem comes when people buy collectibles or alternative tangible assets as an investment, or even as if they're just buying it to enjoy or whatever, if they're buying it on the short-term basis. Because let's say, for example, you invest £10,000. Any company that's operating realistically needs to achieve before costs around 25 to 30% margin. You just have to do that because of marketing. Sales staff are expensive. It's very competitive for sales staff. Logistics, insurance, acquiring the stock, marketing, it's very expensive. It's not economically viable to do it for less than that. That is just the truth of it. But the problem is there's that margin. Now, if you buy the product and you leave it for 10 years, that markup that you've paid isn't actually very bad because you've bought an asset. Hopefully the company's bought it in the trade, selling it to you at retail, but they've bought it well. So yeah, you are paying a markup, but it's obviously not outlandish, but it still is going to take a dent out of your portfolio or collection or however you want to refer to it as, if you change your mind in a year or 2 years. And that's what's so important, is like, there's no costs involved in ownership of gold coins or vintage wine, contemporary art, for example, other than the cost of payment. Once you've got it, it's yours. And with that time becomes your greatest asset with owning it, because you're not paying them fees. But if you don't go into it giving it the time and allowing it to have the patience to hold on to it long term, you end up paying a big chunk up front without allowing that chunk to work in your favour eventually. Like, let's just say, for example, if we think about property, if you buy a property, you're paying a 1.5% prop fee. Let's say it's 400,000, you're paying £6,000 in a prop fee. Then you're paying stamp duty. I mean, let's just say that's 20,000, for example. Then you're paying interest every month. So if you calculate that all up, again, you're paying probably well over 30% of the lifetime of that investment that you're making. But obviously, again, the fee is spread out over a very, very long period of time. So it's not that the fees in this type of purchasing is ridiculous. if you hold for a long period of time, they become very reasonable, but you've just got to hold the asset. And that is so important, because the biggest mistake that retail people make when buying collectibles is they plan on holding it for 5-10 years, but they change their mind. And that's what becomes so frustrating, because this business or this industry is not set up for short-term holding. It's set up to go, I'm 50, I'm going to retire at 70, I've got 20 years to hold this gold. And yeah, you're going to pay a premium over bullion, because that's the numismatic market. You're paying for the rarity of the coin, you're paying for the authenticity of it, but obviously you hope to get more than the bullion in the future as well, and you hope to be able to sell it on at its collectible value. But the truth is that based off the historical performance of gold should perform so well at that point over the long term, hopefully, even if you did only get the bullion value, which hopefully you don't, but even if you did, the assets still perform very well for you anyway. But like I said, the problem comes is when the individual changes their mind, which is fine, but you know, we're very, very clear with our paperwork. As we've developed over the years, you know, we've got really good compliances and really good risk disclaimers and really good explanations of things, which has really helped educate our customers to actually understand what they're getting into. Like, collectibles and alternative assets need to be something that you're buying as a long-term investment, and that's when it goes back to having good salespeople. Because if you get the wrong salespeople, which we've never had, because I can sniff them out a mile away, they say silly things and this and that, and it causes problems. Whereas if sold correctly, you don't have them issues with customers, because they understand what they're getting into. And the other thing is, you've got to not overexpose yourself. Like, you need to leave enough cash. You don't want to be piling all your money into something at a margin, which is fine over the long term if you're going to be needing those assets in the short term. But it's like anything. If you look at, like they say, what do you think are the best stocks and shares accounts of people? What do you think they all have in common? I mean, it's a trick question. So what do you think is the common denominator between the best performing share dealing accounts?
I don't know.
The person's dead. Which is terrible, but it's the truth. So why does that matter? Because the person's left it. Yeah, like the most successful share dealing accounts are by people that have passed away, and that's because they've been left. And time is so important to these assets. Like, I think quintuple £5, I think double sovereigns, I think the big kilo coins. I mean, some of the graded kilo coins, they're expensive now in comparison to what they were, but some of them, there's only 10 of them, 20 of them in the world, you know, and they're massive franchises. You know, like the Bond kilo, we've sold quite a few of the Bond kilos, and a 95th birthday of the Queen and stuff. Like, these assets eventually are going to become super, super desirable, but it's just a waiting game. I can't express that to people enough. I know this one bloke called Michael, who's a notorious gold buyer, a legend. He's been buying before me, and he gets it, and he buys coins he likes, and he has made an absolute, I'm talking hundreds and hundreds and hundreds and hundreds of thousands of pounds. And he's a farmer, he's a normal bloke, right? But he understands that it's just about buying as and when he can, building up a collection and planning for the long term. And I think that's, you know, I can't emphasise to get that across enough. We're close to Knightsbridge now, should we wrap it up? Thanks for doing a vlog with me, Charlie. Is this a vlog? Yeah? Well, thanks for listening to my video. Maybe we'll call it rambling or something like that. But yeah, BSC, if you're interested in learning about collectibles as an asset class, whether it's original contemporary art, whether it's vintage wine, whether it's Swiss timepieces, or whether it's numismatic coins, reach out to us. We've got a cool brochure that we can send you. We'll certainly not badger you or bombard you. One, because we're very busy. Two, because we don't have a big sales team, so we don't even have enough to get round to everyone. But three, we have pride in ourselves. We genuinely want longevity, and we understand that the best way to get someone to want to speak to you is to know that they're not going to be bombarded. You have my word with that. And thanks for listening. Hopefully it's interesting, and let's enjoy a good day of vlogging with the 10 locations for 10 coins. Cheers, Charlie.